Hey guys, what's going on? Welcome back here. Corey Smith, CoreFX, bringing you another T3 Live pre-week market analysis video. Today is Sunday. It is now November 5th. We are into November now. Past October, pretty good trading month. Should be another good trading month here moving forward in November. Quick little breakdown. These videos I do every week here are done prior to the market open, and they cover the week before, so I'll be covering last week's events, what happened fundamentally in the news, what's going on, what happened on some technical charts, each of the major currencies, what we saw happen in the charts, what we're expecting to happen week moving forward, and then we'll cover what to look for this week, what events are important to watch for. I know not every trader likes following the fundamental side of things, but at least knowing when events are happening in certain pairs is something you should definitely be aware of, even as a purely technical trader. So make these videos to give you kind of a little bit of everything all in one, so that you have the news coming up ahead as well as some technical analysis and just what to look for to get you ready for the week all in one spot. So thank you guys for tuning in. I appreciate everybody taking the time out of the day to watch these. A lot of time goes into making these, so I really appreciate the feedback and the support from these guys. And I'll go ahead and jump right into it. Starting last week, we had the end of October, beginning of November. First week of the month is always pretty volatile, as we have NFP out of the U.S., jobs with Canada, a lot of different things always going on. So the beginning of the month is always a pretty wild trading week as far as the FX market goes. And although these numbers aren't really showing it, we had the top three strongest performing currencies were going to be the New Zealand dollar, Canadian dollar, euro. As you can see here, none of them were really that significant of performers. The bottom three performers were going to be the pound, yen, Aussie, and then you had Swiss franc closely behind. For all the volatility and news that we had this past week, it doesn't really show with the performance and the overall percentage change in moves we had this past week. As you're seeing, we have not even half a percentage moves, which is nothing really for a week's time period. But I mean, a lot of these moves were reversed through the week, and there was still some decent trading opportunities throughout the week as we ended the month and started a new one. So not the best, little bit of range-bound moves throughout the week, but still some trading opportunities presenting themselves for us. So starting here with the US dollar, as we've been covering for a long time, we were in a downtrend all year, had this inverse head and shoulders reversal here. Moving averages crossed, we broke the neckline, came up, and have now formed this high base pattern here. If you drop it down to a smaller time frame, you can see it a little better. We've got high basing pattern here. This whole week, price just consolidated sideways in the US dollar. As you can see, Friday's NFP candle, we had dollar weakness off the bat, hit the 50 SMA, and then we ended with some dollar strength back up to these highs. So we're still in this base. Really just choppy range bound all week. But as we have now higher highs and higher lows being set, violated this trend line, the neckline, price above the moving averages, 20 crossed above the 50. We're now in a high basing pattern. Technical analysis tells us chances are we see a break higher and a continuation of this upward move. We'll see if we can get a break of this 95 psychological resistance level here and move up to around 95.50 or 96 even this week. We'll see what we get out of the dollar, but overall, starting the week, at least our bias is going to be for the upside for the dollar. As you can see, these lower wicks here on the daily, you can see every time the dollar tried to move lower, buyers came back in to push it up. So we have some bullish signs on multiple angles here from the technical standpoint. And we'll see in a minute here the fundamental sides supporting it as well, which we love to see here, CoreFX, when fundamentals and technicals both line up. With the euro, it's, again, as we cover every week here, it's essentially going to be the opposite. 60% of FX transactions are going to be the euro dollar. So whatever you're seeing in the dollar chart, you're going to see in the euro chart. We have this upright head and shoulders that we saw here, this uptrend reversed. We had the neckline broken, and we're now in a low base here, sitting on support. Friday ended with a bearish candle, back down to the lows, sitting on the support level. So we'll see if we can get a break lower here and a new lower low set this week out of the euro if we see this move here. Switching over to the yen. The yen moved lower this week off resistance. As I called last week, we came back up, and we were sitting here to begin the week I had said we had made a lower low. This was a lower high within a downtrend now. We could expect to move back down, potentially set a lower low, or come back down to retest the prior low. And that's exactly what we did. We came down, retest the prior low. So now we kind of have a low basing pattern here. As you can see, though, this is a very strong support level. So we're going to take a lot to break this. As you see, price Friday tried to break out but failed to. We'll have to wait and see what price does here, but we've got choppy price action going on. Overall, though, technical side, we're looking bearish out of the yen, and the Bank of Japan's monetary policy views kind of have us seeing a weakening yen in the long term as well. The pound, we are still in this range. I've been talking about this range for a couple weeks now. We're now at the bottom of the range as we moved lower this week due to the dovish Bank of England, but we're at a key support level. We are in this range still, but now we're at the bottom of the range. You can see we gap down lower here, sitting at the bottom. We're also on this strong weekly and daily trend line, right at the brink of breaking this support and this trend line. 20 cross below the 50. We'll see if we can get a lower low set here and roll over down to touch this 126 region and get continued bearishness out of the pound. CAD, we had a little bit of a rally this week in the CAD as we had some better fundamental data returning. Ended higher in the week, setting a new lower high, though, within this new downtrend that we see. With the rolling over SMAs, we had a lower low, lower high. This big lower low came back up to retest. This could roll over this week again and continue lower after this retest of support turn resistance now. So again, more bearish price action here out of the CAD. Swiss franc still falling off. Choppy week here. It's been falling pretty long now as we broke out of this strong level here. I told you guys I didn't like the way the franc was all through here, but if you look now, we've got a pretty decent bearish move since early September all the way till now. We've pretty much fallen pretty hard since these moving averages crossed and we just started dropping. And right now, the price has just been chopping around on this strong support level here. So we'll have to wait and see, but could stay in this range bound, could get a little bit more of a rally as we're pretty oversold here. A little bit of a mean reversion kind of could happen, a little bit due, whether we stay range bound down here and the SMAs catch up, or if we pull back up to the moving averages before rolling back over. Either way, still bearish with the Swiss franc, but not as high of a conviction as some of the other pairs, as we're still a little overextended here. Australian dollar, choppy week as well, but bearish overall. As I've labeled here, you can see after this uptrend was made, this top here, this M formation double top, we came in, bottom fell out. We've made a lower low, then we made a lower high, made another lower low. This week we came up to make the lower high, and we're now sitting back on this low in a little bit of a bearish rectangle pattern down here. You know, it doesn't look very good on the 4-hour chart, but you can see this consolidation. Not too much going on as we had a range-bound choppy week. So we could expect this to break lower and move to the downside. A little bit more conviction to the downside here, as you can see, as opposed to like the Swiss franc, as we have a really clean downtrend being moved here, and we're not very oversold. We've got some consolidation. Price can make another nice push lower. That takes us over to the New Zealand dollar. And as you can see on this chart, we had this big, looked like a sloppy head and shoulders. Price broke lower. We came up to retest, and we said it could probably sell off after this retest. That's what it did. Change in leadership in the government there. We had a strong sell-off, and I told you guys last week we were expecting a little bit of a rally. Last week, going into the week, we never got it. Continued to sell off. So this week, I told you I was again expecting the rally on a stronger level of support this time, right above this 68 zone. So this week we did get that rally. Price rallied up, but as you can see with this bearish price action, we closed with this shooting star candle, some rejection wicks up here, right on this prior little support turn, somewhat resistance now. So again, we could see the New Zealand dollar roll over now and continue lower. Switching this over to a weekly, just want to show you how significant this support is it's sitting on. As you can see here, it has not been below this for a long time now, since really the beginning of 2017, late 2016. So this is a real significant zone here. Whether it bounces up off the zone or breaks through, it's at a significant point here where we could expect a strong move either way, and it's a good pair to be watching. Taking us over to the S&P 500, we are still seeing equities rally. Looking like we could have had a potentially bearish close on the week, but we ended higher, still in record territory. With this, as you can see, these lower wicks still. We had some choppiness earlier on in the week, but these lower wicks still, you're seeing this selling pressure come in, and then the buyers come and take over right back afterwards. So we're continuing to see these buyers step into the markets, buying the dips, and overall bullish in the S&P 500. And really, until anything changes in this price action, although we are on a rip higher and it looks overextended and overbought, until anything changes, really, and any significant levels get broken or anything, we can't change our bullish outlook, and we got to just keep looking for a continuation higher. And as I usually cover, follow these equities just because everything's really interrelated in these financial markets, and with Forex especially, we have a lot of things to keep our eyes on. And the way the global economy and the risk on, risk off theme that I cover all the time, that's something really big to follow, as opposed to how and at least in accordance to how the yen and the Swiss franc, dollar, Aussie, New Zealand, CAD, the risk on, risk off currencies, how they react to this stuff. So it's definitely, we got to keep an eye on these other markets, as they're all really interrelated with each other. But now I'm going to go ahead and take a look back at last week, go over what happened in the news last week, and significant events that happened, how they moved price and all, to give us these chart movements. Starting last Sunday, it's not up here on the chart, but Japan had retail sales expected 2.3%, and they were 2.2%, so slight miss, nothing really big, nothing really changing going on in Japan at all. Monday, we opened early with breaking news that the Robert Mueller investigation in the U.S. with the whole Russian meddling in the election controversy and all. Paul Manafort and his sidekick right-hand guy, Rick Gates, were both indicted on 12 different charges, pretty serious charges. They pled not guilty at first, but this will be a real big cloud developing over the White House, and just the first of most likely many indictments and investigation turnovers that we see coming up here. Just more continued geopolitical risk going on in the U.S. with our White House administration and all. So something we definitely need to keep an eye on. And U.S. stocks closed lower on the day, most likely because of all of this. Then moving forward, we had Chinese non-manufacturing and manufacturing PMI numbers. Again, these are the government numbers, which we don't really rely on as much as the Caixin reading, third-party independent one. But these missed expectations, but we're still seeing above 50, which is still showing growth. So still showing continued strength out of China, even though this number is not too significant. We had a Bank of Japan rate statement, which has been very uneventful for a little while here now. So the rates remained unchanged at negative 0.1% as we had expected. So we don't really expect anything to have changed with the rates, as we haven't for a while now. But it really was taken as a more dovish meeting overall. Yen weakened, not too crazy, as these Bank of Japan meetings haven't been much market movers of late. But Bank of Japan basically calling for more easing if they continue to struggle hitting their inflation target, which they have done, and they lowered their inflation forecast as well. So really just overall dovishness out of the Bank of Japan. Nothing showing any kind of future potential rate hikes or any kind of pickup in anything monetary policy related. And they're continuing with their easing plans, which is something they've been doing for a while now. And the U.S. and Europe have started to back off their balance sheets and quantitative easing, at least discussing it in Europe, and now they're starting to do it. And Bank of Japan still showing that they're not planning on doing this. So, they're still seeing struggled growth over there, and really long-term, my view for the yen is pretty weak, as with this monetary policy remaining like this. So we'll see. Abenomics continues as Shinzo Abe still remains in charge after the snap election. So not too much craziness going on with the Bank of Japan meeting here or the PES conference. Taking us into last Tuesday, we had CPI out of Europe, missed expectations. Not too big of a miss, but the expectations were already pretty low at 1.5%, and they came in at 1.4%, so slight miss. And it's just showing that the inflation's still a struggle in Europe, and they're still, not even hitting expectations, which are even low expectations. So something to keep an eye on over there. The flash GDP out of Europe, the preliminary one, the first reading, beat expectations. So that's a good sign as far as growth goes. And really the European economy is doing good and looking good. The inflation and wage growth, just like with the rest of the world, is kind of what's lagging behind. We had the Canadian dollar's GDP, which missed expectations again, which is back-to-back months of missed expectations following the 2 rate hikes, like I said, Bank of Canada had this year. So really saw continued bearish CAD from this due to just another bad reading from their monthly GDP. U.S. dollar had the consumer confidence reading. This shows, the overall feeling of consumers, the everyday Americans, households, surveys, how they feel about the economy moving forward. And this report blew away expectations. It hit a level we haven't seen in just about 17 years, showing that consumers are extremely confident in the economy and more likely to spend, more likely for the economy to grow and expand. So great sign out of consumer confidence here. Really, really good number. Like I said, haven't seen it in a very long time. So this is great stuff for the U.S. economy. Nothing really happened around Polo speaking. Then we had the New Zealand dollar. We had their unemployment rate. This is their NFP basically out of New Zealand. Employment change beat expectations by a lot, as you can see here. We had 2.2% growth as opposed to the 0.8% forecast, and their unemployment rate ticked down to 4.6% from 4.7%, showing strong job creation in Q3. And really overall just showing a very strong labor market in New Zealand. This led to the reversal in the New Zealand's weakness that we've been seeing for the past few weeks, and this little bear rally we saw within the New Zealand dollar, as we saw a strong move to the upside off this report. Then the real manufacturing PMI number out of China was, as expected, 51, showing continued growth in one of the world's biggest economies, so it's another good sign. Another news event that happened, not on this, was out of Spain, the whole Catalonia referendum and all. Madrid and the Spanish government basically took over Catalan, and the government last Friday before this prior week, and the Catalonian president Puigdemont and some other top Catalonian officials fled to the safety of Brussels, and he's now being called back to Spain to testify in court against his charges, which could potentially lead to jail time, him and the others. And he's not likely to return. He'll probably seek sanctum in Brussels. Eventually, maybe he'll return, but at least in the near future, he's saying he won't. And as far as the new Catalonian officials, there'll be snap elections held on December 21st. So, things kind of seem de-escalated since Spain came and took over, and we'll see how the people react and what happens moving forward. But not too much going on here with this event any longer. The pound on Wednesday had manufacturing PMI overnight that beat expectations with a great reading, 56.3, showing strong growth out of the manufacturing sector and expectations. And we're continuing to see these strong readings out of the UK, which is great. Then we had the USD. Every Wednesday before the Friday's NFP reading, we have the ADP non-farm calculation. This is basically done by the private company ADP, attempt to estimate the employment data that we're going to get from the labor department, and it's typically not that big of a deal because it's not always on par, and they can be pretty off with each other, but still something to give us an idea. This was a pretty good reading out of them, so this is just something to keep an eye on. Manufacturing PMI slightly lower, still a good reading though, so nothing really drastic going on with these readings, nothing really to follow, and no real market moves off them. I just cover it because it's here. And then we had the FOMC statement on Wednesday, which was looked at to be the event of the week, and at least out of the US dollar, and potentially strong moves and all, was a pretty big dud. Really uneventful as opposed to typical FOMC meetings, as Thursday was the new Fed chair appointment from Trump, and it seemed like markets were waiting for that, but as we'll see in a minute here, that kind of was a dud as well. But as far as the FOMC rate went, the rates remained unchanged at 1.25% as we expected. But the good news to take out of it, the bullishness that we did see later on in the week, was the Fed left the door open for a rate hike next month, which is really highly anticipated by economists still. About 85% chance, really, they're surveying from economists of a hike in December next month. So there was also a slight upbeat in the wording from last meeting. The wording is very critical in these readings, as these statements, the wording is what we as investors have to gauge what the central banks are thinking. So the wordings are very highly followed, and the wording was slightly upbeat in this meeting, as they said the economy is expanding moderately, and that was the last meeting. They said that the economy was expanding moderately, and in this meeting they said the economy's been rising at a solid rate. So slightly stronger wording there. That wording can be taken as slightly more hawkish, but they also said they're still expecting inflation to stabilize around 2% in the medium term, but they understand it's currently under the target right now, and they're expecting that to change here in the future, as why they're continuing to gradually hike rates. At this point, it seemed like the new Fed chair was what investors were waiting on, because they kind of shrugged off this Fed meeting, not too much going on. Stocks closed mixed, slightly higher on the day as well on Wednesday. Not too much reaction as far as the equity markets go from the FOMC statement. And then Bank of Canada's Polo speaks again, made an opening statement at Senate committee. Again, not much market reaction, nothing really going on there. But then we had the trade balance out of Australia, which beat expectations. However, we saw a continued weakness in the Aussie. This is something that, when you follow technicals and fundamentals, is something that really is an eye catcher. When you see positive results, data fundamentally coming out of something, stocks, equities, you name it. If you see strong fundamentals analysis or fundamental data and numbers coming out of something, but then you see the price action on the technical side of things reacting in the opposite direction, as we saw here, we had positive trade balance, and then we saw a weak Aussie off of it. This is typically a really bearish sign moving forward, when you get a negative reaction to positive news, or vice versa, the opposite way. If you have a negative news and a positive reaction on technical analysis, typically what the charts are showing you is always going to be king, and that's going to show you that if the markets are shrugging off positive news, then positive news is just going to continue to push that things. So if there's negative news and we're reacting positively, then positive news is going to give a positive reaction. If we're seeing positive news like we did with the Aussie and a negative reaction, then if we're going to have negative news out of the Aussie, we're going to continue even more so with a negative reaction. So really, it's just showing the underlying price action prevailing, and it's really a bearish sign for the Aussie, as we've seen continued weakness from the Aussie. We saw continued weakness the rest of the week, and I'm expecting continued weakness moving forward. Thursday, we had the pound's construction PMI, beat expectations, not much of a reaction, as we had the Bank of England meeting rate statement coming soon, not too long after. So really not too much out of this, was overshadowed big time by the inflation report and Bank of England rate statement. We had a 7-2 vote in favor of hiking rates for the first time in 10 years out of the Bank of England. They hiked rates up from 0.25% to 0.5%. Again, with this, as we saw with the Aussie, even though we had interest rates hiked, which is typically a very bullish sign for currencies, we saw the pound sell off about 150 pips following the meeting, and really remained weak for the remainder of the week. This is a couple things going on. For one, the example I just used of strong news, poor reaction, overall bearish for the underlying currency. However, something even more relevant that I'm seeing is a real good example of buy the rumor, sell the news. Something you see in stocks, Forex, futures, you name it. So there was a high percentage that the Bank of England was going to hike rates this meeting. So essentially, efficient market theory says that everything in the news and in the things is priced into the markets, and price of an underlying asset is currently trading at what the data is telling us. So the pound's high percentage of the rate hike has been calculated into the pound leading up to the meeting, as we saw a bullish move from the pound this week and the prior week leading into it. This is because people are expecting a rate hike, people are buying the pound, they're bullish the pound, and then what happens when the rate hike actually happens? People are no longer buying the pound because price has been put into the market, and now the pound might be a little overvalued, as the dovishness of the pound also showed this was a one and done kind of rate hike. So it was really a buy the rumor, sell the news. Buy the rumor, sell the news all week leading into what we were expecting to be a rate hike, and then the rate hike came out and it sold off. So The Bank of England's outlook was very dovish, even though it did hike rates. The rate hike was priced in the markets, like I said, at the time of the decision, and the Bank of England really came out and they have a real one and done type of mentality. They wanted to hike rates as they wanted to, increase the monetary policy environment, the higher rate hikes and inflation coming up and all. But really, they don't see themselves hiking again in the near future. They're calling for very gradual rate hikes moving forward. So, with Brexit still looming and everything still going on, they're really not likely to hike rates again now. So, this showed us the sell-off in the pound. And really now I see the pound's going to be data-driven moving forward. I see maybe this week we see a continued sell-off in the pound, but from here on out I could see whatever data is telling us. I could really see the currency reacting to the data based off what we're getting. If we're getting good news continuing out of the pound, I could see the pound starting to rally again, as we'll think the Bank of England might adapt their monetary policy to stronger environments. And if we see a continued sell-off, then we'll be more likely to see the dovishness out of the Bank of England and them not likely to hike rates for even further and further time. So we're really going to just watch the data and the pound coming out further, and all eyes are still on the Brexit negotiations here. But also on Thursday, Trump nominated Jerome Powell to be the next Fed chair, taking over for Janet Yellen when her term ends in February. This will be Janet Yellen's one term, and she's out, which isn't too likely for Feds. But even though Trump said he did like Janet Yellen and her policy stance and all, he likes the low interest rate environment. He wanted to put his imprint on the Fed, but he also didn't want to shock markets or cause any kind of turmoil. He loves where equities are, and any kind of surprise to equities could lead to a sell-off. So Jerome Powell has the same monetary policy outlook as Janet Yellen. He's going to continue steering the ship of the Fed the same way, and nothing really surprising about his choice. Again, was also priced into the markets already. So he's likely to remain on the same course as Yellen did, and no surprise to monetary policy or the markets. But there will be a new Fed in the position come February. The Australian dollar had retail sales month over month, another bearish news event for the Aussie, as we missed expectations for the retail sales. Month over month report, retail sales is a huge part of the economy, so it's something to watch for, but continue to see weakness in the Aussie off of it. China has the services PMI number, beat expectations, continued to see growth out of even the services sectors of China, so real strong numbers continuing here from China. Friday, early AM, out of the pound, we had services PMI, beat expectations. This gave us all three PMI readings out of the pound this week, beating expectations. Real good continued data for the pound, so we'll continue to watch these numbers moving forward. But as far as the PMI readings go, 3 beat this week, so great readings. Really, just 3 in a row out of the PMI numbers is pretty cool to see out of the pound, out of the UK. Friday we had a really big event day, and again, CAD had a decent move, but the US dollar kind of let down. Again, trading expectations. We had the CAD unemployment rate and trade balance at the same time as the dollar, same thing. NFP is the first Friday of every month. Sometimes it lies on the same day as the CAD. Other times it doesn't. But CAD's employment changed. They created a lot more jobs in October, so this was a great reading. Their trade balance, however, missed expectations, and their unemployment rate did tick a tenth of a percentage point higher, from 6.2 to 6.3%. So we had a mixed number there, but the CAD did go up about 60 pips across the board. A little more, a little less other areas, but strong price action, bullish price action from the CAD off of this report. So that was something good to watch for there. The US dollar had a mixed report, really. 261 jobs created, so that's pretty good reading following the hurricane data and all. Still not the best readings, still not the best numbers as opposed to expectations and all, but unemployment rate ticked down again, even lower, down to 4.1%. Really, the overall takeaway from this was that the Fed is still likely to remain on track for a rate hike next month. Nothing with this report changed their outlook. And although the dollar initially reacted negatively, a lot of algorithm trading, a lot of computer trading on these reports, missed numbers, selling off the dollar right off the bat. But as investors digested the data and realized that nothing really significant came out of this, the U.S. dollar overall ended up being stronger on the day. So that pretty much sums up this past week, guys. A lot of events we had to cover there. There was a lot going on. This week ahead, not as much. So this should be a quicker little breakdown for you here. But expecting a pretty decent week out of New Zealand. Starting on Sunday, we have the New Zealand dollar's inflation expectations. This is done quarterly, and it is a survey taken to gauge inflation expectations for business managers for the next 2 years. Not too big of a mover, but could potentially create a decent New Zealand dollar trade on a typically slow Sunday trading this session. But so you could look for, if you see some perfect technical setups in New Zealand, but you want to trade it around some volatility, this could potentially be a trading event, as inflation is really something that we're keeping an eye on right now. Starting on Monday, early Monday a.m., how did Japan? Kuroda speaks at a business leader meeting. Not too crazy of anything to be looking for. Not too much else going on Monday. And then Monday night we have the Australian dollar's RBA statement. This is going to be the first Tuesday of every month, so nothing new. We know it's the first Tuesday of November, so the RBA is meeting. Last meeting, the RBA said that they were behind the rest of the developed world in the recovery, which is why they're not ready to begin hiking rates with the rest of the world like the dollar and CAD and now Bank of England are doing. They're really just being totally dependent on their own domestic data to decide where they're going, as is expected, as most countries do. But this meeting we look at to see if this outlook's really changed at all. Not really expecting too much of a change. Since last meeting, the Australian dollar's CPI numbers missed. So this is the big inflation reading. This wasn't good, but they also had a jobs report beat expectations. So we'll have to see what their outlook is here and see if this continued weakness in the Aussie will reverse or if they remain on track with this dovish outlook. And I'm expecting going into this with a bias of bearishness out of the Aussie, but again, can never be anchored to any belief. Always got to be ready to adapt and change. So we could see a strong Aussie off it, but going into it, I will be slightly biased towards a bearish Aussie continuing, as like to go with the trend and the way things are going already. Tuesday, November 7th, we've got ECB Draghi speaking. He's delivering the opening remarks at an ECB forum. Nothing crazy to watch for. Something to be aware of if you're in the Euro. Definitely be behind the charts during this, just in case, but nothing too crazy going on there. And then we have the Bank of Canada Governor Pelose speaking. It's got the Forex Factory red star in here, which means they have a special note on it, and it is more significant than a typical Bank of Canada central banker speech. So he will be speaking specifically about inflation, and there is expected to be volatility around this event, as inflation and interest rates are expected to be discussed, and there will be open question and answering. So his tone, his wording, everything will be followed closely. Canadian dollar, something to be watching here. You could look for technical setups and breakouts to occur around this event to enter trades, or you could look to get out of trades you're already in before this, tighten stops, whatever. But be aware of this, add it to your calendar, know it's happening. Chair Yellen speaks again right after that on Tuesday. She's just giving opening remarks to the presentation in D.C., so not much to watch for. Again, be aware of it, but nothing crazy. Trade balance out of China shows the difference between their net imports and exports. Big exporting country, so always have a really positive balance sheet, but we'll see what they have going with them here, and see what the reading gives us to see how one of the biggest economies in the world is doing. Wednesday, really not too much going on except for, like I said, big New Zealand dollar week, and they have their RBNZ rate statement. The Reserve Bank of New Zealand has their FOMC statement. Basically, it's their central bank meeting. They meet 8 times a year, just like the Fed. Every other meeting, quarterly, they have this press conference after the meeting, which is just like with the FOMC, where they have an open statement to go over, an open meeting to go over their statement, and to take questions and answers from the press and all with regards to the rate statement. So this is bigger, one of the 4 quarterly meetings that's bigger than the other 4. So this is definitely something to watch for. The last meeting was head by the temporary head of the RBNZ, Grant Spencer, who's the 6-month temporary head until a new one is chosen, as Wheeler's term ended. The last meeting remained the same as the meeting before it. No rate hikes expected till late 2019, but they're playing monetary policy as the data comes forward. Since the last meeting, they've had strong CPI and strong employment numbers. So you'd think there was a strong New Zealand dollar since then because the data's been good. However, with the political events that took place, there was a change in leadership. The Liberal Party, the Liberal Labour Party, took over Bill English's Conservative Party that's ruled for 9 years. And now the new Prime Minister, Jacinda Ardern, took over. And again, investors don't like surprises. They don't like unexpected things happening. So the New Zealand dollar's really tanked since then. However, the Reserve Bank of New Zealand has been calling for a weaker New Zealand dollar as it'll help boost their economy. Other countries more likely to buy your exports when their buying power is stronger with their currency versus yours and so forth. So they have been calling for a weaker New Zealand dollar. So I'm interested to see what Spencer's outlook and the Reserve Bank's outlook will be with this meeting. So we'll have to take this one step by step. No real outlook for me going into this one, no real bias. We'll have to just wait and see what we get and what the tone is going to be. Inflation numbers out of China. China's not too crazy of an economy we're watching inflation numbers on, but again, we're still in an inflation spotlight world. So keep an eye on these numbers, see what we get, see how the market reacts, and this could have something to do with equity performance the following day, risk on, risk off, all tied into China. Then Thursday begins with the European Union's economic forecasts. So this is a meeting they've been doing since 2012, and they meet every 2 to 3 years. They meet 2 to 3 times per year. And give the forecast for the following 2 years. Could cause some market reaction as we watch to see what the European Union is taking into account and what they believe the markets are going to look like moving forward. This is a lot of elements that go into this forecast, so pretty good report, something to watch for, just something to keep an eye on for the Eurozone. Swiss National Bank Chairman Jordan speaking at a financial studies lecture. As with any central banker, it's really just something to be aware of. Not expecting anything crazy out of it, but just something to be aware of if you're trading the Swiss franc and keep an eye on. Then we have the Reserve Bank of Australia's monetary policy statement released quarterly by the RBA. It's just going to show their views of the RBA on monetary policy and how they'll move forward with interest rates. Something definitely to watch, not as important as a rate statement, but definitely still something to keep an eye on and something we want to watch here around the Australian dollar. And then Friday, not too much going on. We got manufacturer production month-over-month reading out of the pound. This could potentially, I like these for good 40-50 pip movers overnight if you're either getting into a pound trade prior to the event, hoping it kicks you into some good profits, or looking to trade one after the event. And sometimes the following day or later on in the day, you see some follow-through. So good events to watch for. It shows the change in the value of output produced by the manufacturing sector, month-over-month reading. So it's really just a leading indicator of economic health from the manufacturing industry in the UK. But again, the data is the biggest thing to watch right now out of the UK. So we'll see how they do moving forward. But that about wraps it up there, guys. Appreciate it again, you taking the time to watch these videos. Catch the next video I release after this is the technical analysis video where I cover the major crosses and a couple other pairs I like going into the week and what just the general bias I take with them moving forward. So if you like technical analysis, definitely check the next video. Appreciate you guys watching this one, and I'll see you next week.